Good morning. We are getting into the election cycle. We are minus 1 week to the US election, and of course that will be a major input. The main thing to look for, of course, will be whether Romney wins, and if so, what he will do to Bernanke, which have monetary implications in terms of the policy conducted. Apart from that, I don't think the American business cycle really care whether Romney or Obama gets elected long term. The fundamentals are still extremely strong, in particular relative to Europeans' equivalent. In terms of the intermediate future, there is in terms of election, a rally, normally coming right after an election. So leading into the US election, we think we'll be range bound in what we've seen, 128, 131. Of course, a very broad range relatively these days. But after the election, we expect to see some dollar strength coming on the back of this historic seasonality. And on top of this, of course, the recent data out of Europe has been extremely weak, whereas the US has been more neutral. So on a relative scale, the US is still relatively outperforming. The main issue and the reason why we haven't seen a weaker Europe right now is that the positioning is already in place for both the election but also for the weakening of the European economy. So in terms of positioning, I have a strong indication that people are actually already short, and as such can create a squeeze out before we see the consequent follow through. Have a great week.